Hello, friends. So, today we are going to talk about one leading agrochemical stock that is nothing but UPL. Many investors ask about UPL. UPL is not performing last few years, and many investors actually stuck in that. And this question has been asked by Mr. Pankaj Jain, Dr. Sopan, and Lohit 760. So, yes, guys, they asked that what to do with UPL. And UPL is actually reaching the bottom, and no, currently the whole chemical stocks and fertilizer stocks are down and out. So what to do with this stock, we are going to talk in detail. So let us start analyzing UPL. So talking about UPL, guys, if you see the chart pattern, and if you see from last few years, the stock has not performed. There were many reasons behind that, and some of the reason which you can talk about is the Europe and US, they are not able to perform. Their major part is export only, and that is the main reason why they are not able to perform. These countries are not performing, and also it will take some time, but surely let's see in few quarters whether it is going to go up or not. But if you see the last 5 years, in 5 years the stock has not at all performed. No, it reached up to top of 837 in 21. Now it is almost 488, 475. That is almost 4. So if you talk about when from last, you can say that you from 17 from 17 to almost 2024, the stock is there in a range only. It is not performed, but it is a leading stock, and that's why everyone is no actually enthusiastic about this stock. What should we buy or not at this level? So today we are going to talk in detail about that stock. And again, guys, let us understand UPL first, where UPL is operating and what is their plus point and all that, and how is the production and sales and everything. So talking about UPL, guys, as you are aware, UPL is principally engaged in the business of agrochemical, industrial chemicals, chemical sector completely. It's one of the global leader. UPL has presence of almost 138 plus nations, okay, and is the fifth largest agro chemical company and the fourth largest seed manufacturing company in the world. That's why you can say no, it is one of the leading company. And that's why everyone is interested about this company, and it's been a part of a lot many speculation also. Again, they have UPL has an access on 90% of the world food basket and is a global provider of sustainable agriculture products. So let us talk about where the plants are operating. So talking about various plants, guys, you can see across the world they are operating in USA, Latin America, Europe, China, across India, and everywhere they have been locating, and they have a very good you say footprints across the world. So if you see here the volume, actually no, this is what we are seeing, the volume and everything, how the UPL has performed in last few quarters. So if you see volume in last few quarters is going negative only, and that is the problem. Like quarter three also it was negative. Again, if you could talk about geographical growth, you see North America, which is one of their yes, a good region, which is 63% down. India is 20% down. Europe is almost 30% down. Latin America, which is one of the highest revenue giver, is almost 28% down. Only the growth is rest of the world other than these countries. Again, revenue mix, if you talk about North America is almost 10%. India is actually having only 8.7%. Okay. Europe is 10%, and Latin America is having the maximum share of almost 43%, and rest of the world is 27%. So you can see these companies majorly operating outside India, and that's why global economy plays a big role. If the global economy is doing well, then this stock may do well, and if the global demand, that this stock will do well. But otherwise, if global economy is down, then this company will always have a fall. And also that the geopolitical crisis and all that is not helping this company. So if you talk about the product wise breakup, the herbicides is almost 34%, fungicides is almost 25%, seeds are 5%, insecticides is 16%, and others are 20%. Even location wise breakup, as I told you, the major part is Latin America. From the seed part of view, we are talking about 26, South Asia 31, and rest is other countries. Again, location wise breakup, guys, Latin America, as I told you, is in the highest share. Europe 7.3, North America 11.4, rest of the world almost 28%. Segment wise breakup, guys, agrochemical activity, crop protection is almost 85% of their total revenue, and that is where they are having the maximum share. Agro activity seed business is almost 9.4%, others are almost 5.2 business. 5.2%. Now, how is the leader? How this UPL is a leader? So let us understand what is the market share across the world. So if you see in the global market in aluminum phosphide, it is almost 25%. Crop protection, it was almost 8% in across global market. Even crop protection 14% in India. So whatever sale is happening at India level for crop protection, 14% is of UPL only, and 9.7% market share in Latin America, which is the main business. Okay. Now, when we talk about the company and everything, let us understand now. Before I go to the outlook, what was the quarterly result and how was the result, and how over the years how the result is performed. Basically, UPL is performing. So let us directly jump into the result. So talking about the result, guys, if you see here, this is quarter to quarter result. Now, if you see the quarter to quarter result, it has reached almost 15,000 and almost 20 March 23, which is the peak season. Almost 16. Uske baad they are not able to perform. If you see now last two quarter, it is showing a negative profitability, and this is the problem is creating. This is why the stock is going down. It is showing us a negative profitability. Profit before tax is also negative. So basically interest cost is going on a much on a higher side. Okay, they have a debt, and they have to take that because to suffice the working capital and all that. Again, they have a good expansion plan also, but is interest cost is the major one, and that's why the EPS is negative. So if you talk about the year wise, so if you see year wise, almost March 18, March 2019 was 21,000. Then March 23 it was 53,000. Okay, so overall year to year it has gone up, and currently it is almost 45,000. But when you talk about profitability, that is also slowly and gradually year to year gone up, but this year it is having a negative profitability. And this is what is hurting the company. So if you see the growth, the current year, so 10 year sales compounded is 19%, 5 years is 25, 3 years is 14, but current year 12 months is almost negative. Okay, compounded profit growth is also minus 114% negative for the current year. So last TTM is nothing but the last 12 years, and last 5 year 3 years is 20%, 12% respectively. Now stock performance, last 1 year it has almost gone down by 33%, and you know the reason why it is going down. Okay, 5 years it is 4%, and 3 years it is 7%. In 10 years it is again 14% return. So what it shows that in last 5 years the stock is not able to give you any return. Your FD would have must be given more return than your than UPL share, and that is where you have to keep this point in mind, because why you want to be in a stock now which is not giving you return. Now you may say, but future prospects are good. So let us talk about that also. But before that, ROE is almost 13%, which is okay. 3 years it is 15, which is also okay. Nothing wrong in the ROE in fund. Now let us understand how is the future outlook and what the company is thinking, and what is the future prospects from here. So talking about UPL is expected that next quarter, that is quarter 4 financial 24, to be weaker year on year. So it will not be, it is one of the, you can say the best out of 4 quarters. This is the most performing quarter, that is quarter 4, but it will be weaker than the last year. However, it expects a margin improvement quarter to quarter. The management expects normalized business from the quarter to financial year 25. And that is what it will take some time. It will take at least 6 months from here. The company will get recover. The management expects the price selling to continue in the year term. UPLL is witnessing a pickup in volumes in Latin America and double-digit growth in revenue in the rest of the world region. So slowly and gradually the things are picking up, but it will take some time. What it is expected, it will take another 6 months. Again, UPL reduce their selling, that is advertisement costs and everything, by 19% year on year to almost 22.7 billion. Okay, and is on track to reduce another by 100 million USD by 2025. The major part of the reduction will be sustainable. Why they have to reduce? Because if your sales is not coming, you have to cut down your costs at the end of the day. What are the near-term challenge for UPL? In the, again, in the agrochemical industries, the accumulation of high inventory as distributors opt for need based tactical purchase. See guys, uh, franchisees and distributor cannot hold the stock long. They also have to dispose the stock, otherwise it will go, no, the problem with the stock is that they have to sell at a low value, low realization, and that is what will hurt, or it may get, no, spoil also. So that is when, no, the distributor don't want to accumulate the inventory, so they are like just in time inventory they want to keep it, and that's why they don't want to hold inventory, and this is also one of the problem. Again, declining agrochemical prices led by aggressive price competition from Chinese post patent exporters. So they are facing, UPL is also facing a big competition from China. From China, their economy is down now. In order to increase their export, now they are also reducing the cost, the price. And if they are decreasing the price, so if they are decreasing the price, of course UP will have an issue, because they are the direct competitors of UPL. So as the aggressive price competition is there with China, they are also is facing the price issue. They cannot increase the price easily. Also, considering the short-term change, cash flow generation, debt repayment remains the key monitorable. See, as I already shown you, the interest was the major cost. Now, whether the UPL is able to suffice that interest cost, or whether they are to, honor that interest, so that is what we have to see, because this is a big figure. This is a interest cost is a big figure. The management expect normalized results, as we told in Q2 financial 25. Okay, but basically, margin improvement will increase from here. Again, management believes quarter three financial 24 was the most challenging quarter. So the quarter gone, which is literally the company has gone into losses. This was one of the most challenging quarter. Hopefully, slowly and gradually, things may settle from here. The things may start changing from here. Also, it expects price challenge to continue until one financial renewal. That is what we have spoken of, because the lower pricing from China. Okay, again, the problem with this company is that if the things continue like this, they will not able to maintain their credit rating whatever they have currently. Because if the profitability is getting affected, credit rating agency may downgrade the company, and if they are downgrading, again the interest cost will go up for UPL, because you know that whoever is giving loan to the company, they always see their credit rating also. So the problem is whether that is also get impacted or not. Again, there's only one season for this industry, and if that is adversely affected, then the impact will remain quarter. So वही होता है कि ना, 1 or 2 quarter if in a year goes wrong, it will be no that the impact will be there across other quarters for a year. Again, guys, most of the global players are operating with a low utilization, so the demand is relatively less for the fertilizer and no agrochemicals, and this is what is impacting currently basically UPL. And so there are not many negatives. Then what is the positive, you may ask? That the positive, we have to see what is going to happen from here. Okay, so let us understand through comparing with the peers company, and let us understand how much valuation we can give to this company. Okay, so let us compare with the other companies. So if I compare PI in UPL, so UPL, you can see it is almost 35,000 crore market capitalization, and these are Rallies, Dhanuka, Sominto, all these are competitors. Now, if you see ROE almost 13, which is one of the lowest among the against the PI, Sumito, and all that. ROC is 14, RO is 5. Then the problem which lies with is that it is having a negative profitability, which other companies are not having. And that is where the problem lies. Now, their EPS is negative, then how much P ratio you can give? So currently P ratio you cannot assign. Okay, but let us understand now. We have to understand what will be the future. Now, talking about the future, guys, if you see last 3 years profitability, okay, it is almost a return is negative, and you can see sales is around 14%. So even if we come back to the same EPS which was there earlier, let us see what was there, the EPS almost 2 quarters back, okay, before it gone to negative. So almost you can see around 10, 14, around 15 EPS is that. This is quarterly, so overall it may be around 50. Okay, so last year it was around 47. Okay, 47 EPS. So suppose in 2 years, if it goes to 47, 50 EPS also, and we give a 10 PE ratio, like no, minimum P ratio, because now it is negative, but let us give 10, then also it comes to 500 rupees price. See why I'm trying to just to give you a hallmark figure that currently it is trading at around, you can say 474. So does not give you a big uptick from here. But the only caveat is here that how the company is able to perform from here. If it is able to perform it, and if it is able to give you a better result from here, if the you can say the progress is much better from here, and the world level economy is recovering very fast, this company may give you a positive surprise. But that is a bet you have to take. How much is the recovery, whether UPL will bounce back very fast or not. Otherwise, no, the thing is next 6 months does not look great for UPL. But I think the chemical industry is going to bounce back, but there are many other stocks available in chemical industry and agriculture which are far better than UPL. So my suggestion is that if you really want to play, why don't you go to other companies which are there better available in the chemical industry or agrichemical industry, rather than playing UPL where the profit is negative and we are thinking that it will bounce back well. It may bounce back well. I'm not saying it cannot, but that is what the take you have to take it. So guys, this is what my take is. Hope you like this video. If you like this video, do click the like button and do share this video to as many as possible. If someone is investing UPL, you will be helping them to invest. And guys, if you want any stock to be analyzed from our side, put it in the chat box. We'll try to cover next time. So guys, do subscribe the channel and I'll be see you soon in the next video. Bye bye.